These are unusually volatile times, excessively volatile times for markets globally. Take yesterday's data, for instance. Brent crude crashed almost 10% to $100 a barrel. Dollar index rose above 106. Rupee again depreciated to an all-time low of 79 rupees 37 paise to the dollar. Euro slipped to a 20-year low to the dollar, and the foreign portfolio investors have turned buyers in India. How do we interpret these data? Crash in crude, along with the correction in other commodities like metals, indicate an increasing possibility of recession in US. Increasing probability of a recession in US leading to a sharp global economic slowdown is negative from equity market perspective. But for India, sharp correction in crude is a big positive. An important data point from the Indian stock market perspective is that foreign portfolio investors have turned buyers after a long gap. Now, it is very important to see whether this trend sustains or whether this is a one-off. If the foreign portfolio investors continue to buy or at least stop selling as they have been doing during the last 9 months, it will turn out to be a bullish signal for Indian markets. The important question is, what should investors do now? It is important to understand the fact that the level of uncertainty is very high. We don't know whether the US will slip into a recession or not. We don't know how deep and long the recession would be if that happens. We don't know how long the Ukraine war lasts and how it will further impact commodity prices. Given this uncertainty, investors have to be cautious but smart. The short-term market trend is uncertain, but long-term prospects look very bright. Valuations are at reasonable levels now, not yet very attractive, but at fair levels. Importantly, valuations are attractive in certain segments like financials. Leading banks are attractively valued and their growth prospects are improving. For long-term investors, this segment is a safe bet now.